As I make this statement, the pandemic holds the world economy hostage once again. Despite signs of moderation, record numbers of daily infections in several countries and consequent containment measures are denting the pace of economic activity. The surveys done by the Reserve Bank reveal that capacity utilization is rising and the outlook on business and consumer confidence remain in optimistic territory, which should support investment as well as consumption demand. The prospects for agriculture have brightened on good progress of winter crop sowing. Overall, there is some loss of momentum of near-term growth while global factors are turning adverse. Looking ahead, domestic growth drivers are gradually improving. Considering all these factors, real GDP growth is projected at 7.8%. I repeat, 7.8% for 22-23, with Q1 22-23 at 17.2%, Q2 at 7%, Q3 at 4.3%, and Q4 at 4.5%. The CPI inflation trajectory has moved in close alignment with our projections. In particular, the softening of food prices is providing welcome relief. The improving prospects for food grains production and the expected easing of vegetable prices on fresh winter crop arrivals are adding further optimism. Moreover, the softening of pulses and edible oil prices is likely to continue in response to strong supply-side interventions by the government and increase in domestic production. The hardening of crude oil prices, however, presents a major upside risk to the inflation outlook. Core inflation remains elevated at tolerance testing levels, although the continuing pass-through of tax cuts relating to petrol and diesel last November would help to moderate input cost pressures to some extent. The transmission of input cost pressures to selling prices remains muted in view of the continuing slack in demand. Further, as risks from Omicron wane and supply chain pressures moderate, there could be some softening of core inflation. On balance, the inflation projection for 2021-22 is retained at 5.3%, with Q4, that is the current quarter, at 5.7% on account of unfavorable base effects that ease subsequently. In particular, CPI reading for January 22 is expected to move closer to the upper tolerance band, largely due to adverse base effects. Taking all these factors into consideration and on the assumption of a normal monsoon, CPI inflation for 2022-23 is projected at 4.5%. I repeat, CPI inflation for 2022-23 is projected at 4.5%, with Q1 22-23 at 4.9%, Q2 at 5%, Q3 at 4%, and Q4 at 4.22%, with risks broadly balanced. At the current juncture, the conduct of domestic monetary policy is primarily attuned to the evolving inflation and growth dynamics, even as we remain watchful of spillovers from uncertain global developments and divergent monetary policy responses. Our monetary policy would continue to be guided by its primary mandate of price stability over the medium term, while also ensuring a strong and sustained economic recovery. As stated by me earlier on several occasions, our actions will be calibrated and well telegraphed.